We're going to get a little bit wonky in this video today. So, if you're into 5-minute fib talk, jump to tic-tac-toe or Insta-trash, because today we're going to talk markets, and we're going to talk about, I think, one of the biggest conspiracy theories that I have ever come up with. So stick around, you're going to want to know, because when bonds start beating stocks, most traders don't notice. But that's when the biggest shifts in Bitcoin actually begin. Right now, Wall Street is pulling money out of equities and parking it into treasuries. Every time that happened in the past, big moves happened, and we're loading them right beneath the surface right now. And I got a little bit of inside information that I know nobody picked up on. I know it. So right now the question is Bitcoin bullish or bearish? That's not the question. The question is, what's the bond market telling us? And trust me, it's saying something huge. Welcome back, Crypto Crew. It is your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already. And make sure you come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day, because we're crazy crypto maniacs here. All right. Look, I'm seeing the biggest setup, I think, of the year. And I got receipts. So stick around. So for those of you that are just into the short term, let's start with the short term and let's move into the big picture. Okay, actually, you know what? Let's have an amalgamation of everything. All right, a little bit of a mix of everything. All right, keep everybody happy. Let's start with the big picture. The Fed gave us the rate cut, right? Okay, it was as expected, right? Now, but then Powell threw cold water on the hopes for another one in December, right? That single comment flipped global risk sentiment. Yields dropped slightly as traders started to hide in bonds. Stocks rolled over, and of course, the dollar versus the yen caught a bid. Okay? That created the dollar index to rise up a little bit, putting some pressure on Bitcoin. Okay, cool. Now, Bitcoin slipped that point from, say, 115 and a half, whoop, right down to the 106 level that we had just recently, right? Now, if we're looking at the Bitcoin, say, 2-hour chart, let's do some chart work. The first thing that we have to start to understand is there's things that are working in the background. I think it's going to totally blow your mind. So just bear with me, okay? It's hard for me to even wrap my head around it, and I want to make sure I can do it concisely and not be like so bloviating about it. All right. So, as it stands right now, yesterday I told you that we could dip down in between the 106 level and potentially like 105. I had the two levels right here, really 106,000, right? Market came right down into that zone, and now we're starting to get a slight reprieve. Now, I'm going to say this: we could be in this range for quite a long time. So we're going to have to really focus on the short-term trading aspects of this, and I suggest that you get into our pro group, because there's going to be a lot of opportunities, but very short-term opportunities. Overall, the big guns are really trying to set this marketplace up for the biggest robbery, one of the biggest robberies, okay, probably performed by the big guns. Now, the reason why I say that is because Wall Street is now involved, and they just recently got involved, okay? Originally, it was the whales that were in the marketplace, that you could control movements, right? I mean, you had the big players that had a lot of Bitcoin that would come in every once in a while and whack it, and markets would move down, retail would follow, and but the whole game has changed. Unfortunately, it's not going to be that easy anymore. Okay, and definitely the whales are not going to be able to control this thing. Absolutely not. Matter of fact, the institutions aren't going to be able to control it unless there's a little bit of collusion. And I'm sensing a bit of collusion between BlackRock and some of the other big boys. They're probably talking, especially when we talked about that regression channel. I'm not saying it actually happened. I'm saying, conjecture on my part was like, they could have started talking to each other, saying, hey, we should whack it, because really, there's the ghost of the marketplace that's still there, the potential double top. You don't think they see this as well as we see it? They know what this means. The big guns know what this means. They know what it means for retail. They know what it means for savvy traders that trade technically. The technical traders are scared to death of this thing. Yeah, and rightfully so, because it's a very, very powerful signal. It's a reversal signal. So you got to be really cautious with it. Now, I think that they're going to be taking advantage of it. So as Powell basically, you know, flipped the script a little bit, market came down to the 106. This 106 level is pretty important. Could we break it and go lower? I do believe we can. The biggest line in the sand is this one, like right there, the 103, and of course that spike down that occurred on the ADL, all the deleveraging, the automatic deleveraging that had happened down to that 102. Now, here's the thing. We got stocks that have rolled over. The dollar has caught a slight bid right now. So that's putting pressure on Bitcoin. Yet we have not dropped below 106. That's a good sign. Okay. So it's a classic. Right now, what's happening right now is a classic risk off rotation. So when the market doubts liquidity, Bitcoin's one of the first assets to feel it. Not because it's weak, but because it's the highest beta asset tied to global money. Now, we know M2 is going to increase. There's also some other things that are happening with the Fed in the background where they actually stopped quantitative tightening. It's not, I told you that yesterday. You can watch yesterday's video if you haven't seen it, if you're new to the channel. Go watch yesterday's video. It gave some good information about, how they stopped the quantitative tightening and they're starting to let assets roll right now. So right now, what we could see short term, that the Bitcoin chart, short term, if we look at it, right, we could say Bitcoin is, louder than words. There's heavy resistance at 116. There's stacked bids still around 106,000. Whoever breaks first loses. So we got to stay sharp. Okay, that's why I'm saying you're going to need some help with this. It's going to be very volatile. We haven't seen anything yet. Now, right now, we got the resistance at 116. So if we could clear that level, then my conspiracy kind of theory would be kind of grayed out. But I think it's going to play until the top is broken, until we can get through this ghost that I keep talking about, that potential double top. And I'm going to explain that whole theory in a second. All right, just let me get through it. So this is where the beginning of the real setup began. Okay, and it started right here. We have this data. You don't think that BlackRock has this data? You don't think that Vanguard has this data? That every time after an FOMC meeting, Bitcoin dumps. Of course they do. I mean, we're bright, but they're just as bright, if not, they got more brighter minds than we do. Okay. So they know this. They also know statistically how far they can push something. They talk about standard deviations and, bell curve analysis, and like we could really push this thing down to like 100. People will just be selling into our hands, right? They were just wanting to get out. Fear, greed, right? They play on it. Okay. So now what's happening is this way is I say this is part one of the setup. We know that Bitcoin bleeds every time. 4 meetings, we had 4 dumps. 10%, 6%, 8%, and now we have 7% and counting. Okay? Patterns don't lie, but they don't last forever either. So the trade we got to trade the setups that we see. That's why I'm thinking we got to shift more towards short-term trading, real quick hits, because I think we're going to be here for a little while. Could be another 3 weeks, another month. All right. Now, actually, potentially even longer, because what's happening right now, and I'm going to bring it up in a second. They're saying there's potential no rate cut, right? In December, right? That's what Powell did. That's how he threw the cold water on this whole thing, right? So, this is as it stands right now. We could be getting. It's going to get a little difficult. It's going to get more difficult. Okay. So now, as it stands, okay, here's what's happening really under the hood after with this happening. Okay. Stocks have underperformed bonds for the first time in almost a year. So here I want to show you the SPY versus the bonds. Okay. Right now, the SPY bond ratio, a classic barometer, has rolled over pretty hard. So if we look at this ratio, the SPY is about 7% year to date. The bonds are sitting right now at where are they? Right up in here. We got a 5% yield. Okay, so that 2% gap, used to be 8. And it's still narrowing right now. So that tells you institutions are trimming equity exposure and locking in yield right now. So there's a rotation going on with the big boys. Makes complete sense. Remember, they're trading hundreds of millions of dollars. So they have what's known as diversification risk. They have to diversify, right? So right now they're taking the pause and they're going, Powell gave us the signal, okay? So let's start to diversify a little bit. So what's going on right now is risk appetite is draining quietly right now. And when risk appetite drains from equities, Bitcoin doesn't die, it waits. That's why I'm saying we could be here for a while. But once those bonds rally enough, liquidity always comes back into the system. Now it's a waiting game. So we could look at Bitcoin. Bitcoin trades, it will trade like a tech stock when money is flowing, and like a long bond when yields rise. So it's quiet. Now, when you compare the stocks versus the bonds, you're really measuring what's known as risk appetite versus yield pressure, the same forces that drive Bitcoin. So when stocks are beating bonds, investors are taking risk. Liquidity expands. Bitcoin usually rallies hard. But when bonds beat stocks, investors want safety and yield. Liquidity tightens and Bitcoin tends to struggle. Exactly what we're seeing. So in simple terms, Bitcoin trades more like a NASDAQ asset when yields climb. Institutional desks price everything off the discount rates. I'm going to say it again. Institutional desks price everything off the discount rate set by bond yields. Yields fall equal cheaper money equal higher future value equals Bitcoin and techs rise. Yields rise. Money tightens up. Low valuations. Bitcoin cools off. It's not gonna crash. It's just gonna cool. And if you're not aware of what I'm gonna begin to tell you, you're gonna get fooled. You're gonna be robbed. Okay? I'm trying to bring you stuff that nobody else talks about. And let's get into it. Let's not stop talking about it. Let's get into it. Now, here's the normal structure. Okay? Here's the normal structure. The normal progression, and the big guns are pushing this. All right? They're pushing the bullish. They're pushing this test. They're pushing it right now. 4 retests, 4 explosive moves. 90%, 183%, 108%, 63%. Every major pump began the same way. A bullish retest of the trend line. You can't fade it. You just got to hold tight. You got to get into a pro group will help you. All right. If you're alone, you're looking at the charts and you're watching every small movement up and down. You're gonna want to trade the small movements. Get in. We'll help you out. We'll take some trades off of it. But this is not the time to panic and say that Bitcoin's going to crash. No, it's not, because here is the big banger of this video. Okay. This is where the big boys are going to set up to rob the masses. It's a perfect storm that's brewing between what's happening with the SPY versus the bonds, and how right now stocks are underperforming. Also, we have that potential double top technical analysis for the short term traders. The big guns see that, and they're going to be forcing Bitcoin lower to load up cheaper, which they have been doing. Okay, yeah, right. This is just the big guns pushing Bitcoin lower because they want to buy it. Baloney. This thing is crashing. I'm getting the heck out. I'm not sticking around for this. This thing is dropping, and I'm gone. Okay, if that's fine. You know, it's easy to be a summertime soldier. You know what I mean? When Bitcoin's rallying and every day everything's green, it's easy to be a summertime soldier. As soon as things get difficult, people start bailing. Cowards. Now, I'm not saying that I'm all right. That should be metaphorically. All right. Let me walk that back quite a bit. If you're trading with over leverage, okay, you're going to need to calm down and scale back. All right. Because over leveraging makes you a coward. Because as soon as the movement starts going against you, trading too large for your portfolio, and of course you get overwhelmed and go, "I got to get out of this thing." But what I'm saying is, long term Bitcoin is going much, much higher, much, much higher. We're talking, 180,000, 200,000, but that's not happening right now. Okay, we're in abyss. We're in the midst of a sticky situation. So I apologize for calling anybody a coward. I don't mean it in that respect. I mean, if you're overtrading too large for yourself, of course you're going to want to dump. But I'm telling you not to cut and run. Scale back. Of course, trade with your head not over it. All right? And just chill out. Chill out. Now, why? Why do I say it? Because let's get real for a second. You think that it's coincidence that Powell talks tough, and then out of nowhere, Rick Ryder comes out and hints that the Fed is going to skip a cut, and then Bitcoin suddenly drops right into an accumulation zone? Okay, so who's Rick Ryder? Well, he's BlackRock's CIO, managing over 2 trillion in assets. And he's also on the short list to be the next Fed chair. Now, when he says there's a chance the Fed skips December's rate cut, that's not analysis. That is a message. And it's a message that I heard loud and clear. It's a message that says, yeah, probably there is not going to be any rate cut. Yeah, you can count on that. All right. Now, the marketplace has priced in a rate cut from 90%. They went down to 70%. I would probably move it down to like 60% right now. All right. Because just from that statement alone. Now, he knew exactly what that statement was going to do. It was going to keep yields sticky. Okay. And it was basically, it would scare retail, drain liquidity, and push Bitcoin right into the discount bin. And it happened. It went down to 106. Now, I'm not saying we can't go lower. Remember, the big boys want this thing lower. That's why I'm trying to tell you, I think it's the biggest setup. It's like a corner, an old stock corner from the 1920s. That's what I think they're trying to pull off right here. So, because if you think about it, BlackRock already has a massive Bitcoin ETF. They don't want to buy size at 116,000. They want the market nervous, headlines screaming, liquidity be really shallow, so they can accumulate quietly between, I don't know, 100 and 105,000. The same setup we saw before every major institutional breakout, 2020, 2024, and now again, okay, near the end of 2025. When the world thinks the Fed's turning hawkish, Wall Street hears, we're about to refill our tank. That's what they hear. And he basically gave the signal to it. So here's the takeaway from the whole thing. Retail panics when Powell starts to frown and pros smile because it means the market's about to offer them a markdown. And that's what they're taking advantage of. The Fed's not the enemy. It's the mechanism that creates the opportunity, right? The entire setup looks engineered for one reason, to let the big guns reload Bitcoin cheaper before the next liquidity wave hits. So are you starting to see the main point is we got BlackRock, that's the guy he's on the list to become the Fed chair. That gives him all the glory. First, okay, boys, no rate cut. Let's reload as best we can, best prices we can. And then when I get in, I cut the rate. Or after December, let them cut the rate one time. Then when I get in, I turn the floodgates on seriously. So this is what we're looking at right now. If you looked at Bitcoin versus the 10-year real yield, it's inverted right now. So we told you that Bitcoin trades like a NASDAQ proxy when the yields do that. All right, so that's what we're seeing. So right now, if I come back to the short term, okay, short term support 102, 106. Resistance 114, 117.5. If we lose 102, we're likely to retest to 100. Hold the band, and we're setting up for another short squeeze towards 115, which is actually in the works right now. We got to actually get above 112. All right, let's move on over to Ethereum because I spent a lot of time on that, but I hope that you got some value out of it. All right, so here we go with Ethereum. All right. Ethereum flipped resistance into support. The red box is and was the final boss. Ethereum closed above it, and now it's starting to retest. It's a classic breakout structure. Again, Ethereum's pinned right now. Okay, Ethereum is pinned. It's pinned between what and what? Well, my goodness, we've been saying this. It's pinned between like 3,600 and 4,200 right now. But it's a classic breakout structure that we're seeing in it right now. So we could say it's coiling tight. Okay, again, between 3,700 and 42. Volatility is at a 6-month low. And because we got Bitcoin dominance extremely high again. It's happening again. So when this thing breaks, it's going to move fast. So if we look at Bitcoin dominance, okay, we can see it right there. Broke the ascending wedge, but look where we are right now, right back up into the red area here. It's sitting at like 60. Give me a break. Give me a break. So Ethereum right now is in the passenger seat. All right, before we wrap up, I got to tell you about our free trading community that I keep alluding to, right? It's right here. The link is in the description. Click this link. Be taken over there. Completely free to join. We drop insane alpha trading opportunities daily for you. We're going to, I think, be focusing more on the short term because we think we're going to be in this area for a little while. If you're a lone wolf, you want to go it alone. We got 2 excellent brokers that you can choose from. WEX, low fees, fast execution. BTCC, low fees, fast execution. All right, but they're both offering different serious bonuses for new clients, right? I think that this guy's giving away like no fees for life right now. That's WEX. And I know that BTCC is giving a $500 giveaway for a new account. Pretty good to help you set off. But what I would just suggest is you join our pro group. Costs you nothing, okay? And we'll help guide you through so you can level up your trades and stack your profits together with us. All right, let's go on to good old altcoin season. Man, it's on hold, okay? If you look at this, Bitcoin rejected from macro resistance. Ethereum and Bitcoin bottoms at a 5-year support. Really, this chart's like a cheat code. It's not a question of if, only when. So we got to prepare for the ignition. It's on the sideline right now because of Bitcoin dominance. All right, so the alt market cap sits right around 1.5 trillion. It's down 3% on the week. And Bitcoin dominance rising means liquidity is parking in majors. It's not looking for moonshots right now. So right now, patience is greater than prediction. You don't chase alts in a bond rally. You wait for dominance to stall. All right. So from a desk perspective, really what we're going to be looking at is you got to watch ETF flows. Watch IBIT. Watch FBTC. Got to keep an eye on the dollar index, and we got to watch the real yield spread. We line those three up. Risk on, Bitcoin will front run equities again because liquidity always leaks into the most efficient asset first. And right now, that's still Bitcoin. So that's my take on it today. I hope you got some value out of it. Again, I apologize for, I didn't mean to call anybody a coward. I really feel bad about that. I shouldn't have said it. I was getting like, a Breaking Bad moment there happened, when Walter White screamed at Jesse, coward, because he was hanging out with Hank. I don't know. Anyway, so that's the rule for you. So when bonds beat stocks, don't fear it, track it. It's a prelude into the next liquidity wave, and Bitcoin always is first to ride it. All right, so make sure you come on over to X. You follow us on X, where we talk about Bitcoin, crypto all day, every day. Why is that like loading up again? So what do you got to do? Well, you got to join our pro group, okay? Promise, I won't call you a coward in there. What else you got to do? Well, you got to trade with your head, not over it. Over leveraging creates cowards. Okay? What else you got to do? Well, you got to do your own research. As you know, I am not a financial advisor. I'm just a trader like you. And as a short-term trader, what do you got to do? You definitely got to enjoy the party, but dance near the door. I'll see you tomorrow. Cheers.